Good afternoon, ladies and gentlemen. Welcome to our special edition on earnings for the first quarter on Business Today Television. We are thrilled to welcome Mr. Vineet Agarwal, Managing Director at Transport Corporation of India Limited. This is India's largest transporter of road-based goods. And of course, on Mr. Vineet Agarwal's wheels runs about 2.5% of India's GDP. Good afternoon to you, Mr. Agarwal, and a very warm welcome. Let's begin with the numbers that TCIL has posted for the quarter gone by. There's a 10% increment in sales year on year to 1,045 crores. Net profit similarly has risen 11% to 91.6 crores. And of course, the EBIT margin is up 3% to 104 crores. Let's begin first. Where do you see the maximum demand coming in for goods to be transported? What are the sectors which are under your radar when it comes to expansion?
Hi Shail, thank you for having me. Usually the first quarter is slightly weaker because it's the end of, right after the end of the financial year. Also it was the election year, so there were a little bit of stress in the markets, but generally all our businesses have done well. We think that we work very closely in the automotive space where we move cargo for a lot of the automotive companies, whether it is the two-wheeler, three-wheeler, four-wheeler, the earth-moving equipment companies, the tractor companies, the commercial vehicle companies. So there is still that traction remains. A bit of slowdown on the consumer side, but otherwise that traction is there. And it is all in line with the fact that there is the festival season that's going to be coming up, and there's stocking that's also happening because of that. So in line with our expectations, the business started to improve, and we look forward to the next 9 months.
Okay. Transport Corporation of India, ladies and gentlemen, is broken up into Freight Division, Supply Chain Solutions Division, and Seaways Division. Mr. Agarwal also runs an Energy Division. Let's get some feedback from you, Vineetji, on where do you expect demand to come in. Of course, when companies expand capacity, they reach out to their transporters and talk about increasing trucks on a particular frequency or on a particular road. Where do you think within your own universe do you see demand sort of increasing in the coming quarters compared with the same period last year?
Right. So in the coming quarters, we do expect things to slightly get better on the consumer side. This is in line with the fact that there is a good monsoon this year, as well as that there is a trickle-down effect post-elections as well, because consumer confidence tends to come back. So definitely on the consumer side, whether it is textiles or whether it is home-related products, or even for people wanting to change their homes or do some work around it, paints and so on, should also start doing better. Secondly, if we take the bigger ticket items, consumer durables, etc., will be also in focus in the next few months. Of course, automotive sector continues to be there. Now, all of this would mean that there should be demand on the capital goods side as well, because as demand increases here, capacity utilization increases, which means that it gives incentive for whether it is in companies who are setting up new plants or companies who want to do expansion, a good incentive. So that would also start picking up in the latter half of the year, as it has also. The other sector that should pick up is infrastructure related sectors. So typically infrastructure has a 3 to 3.5 times impact on the economy. So with the budget approved with a higher expenditure on infrastructure, we do expect that to definitely help the growth of the infrastructure related segments like cement, industrial equipment related to that, and so on and so forth.
Let's drill down into numbers, Mr. Agarwal. How much of top line is contributed by the auto sector? And if you look at infrastructure piece in totality, what are the percentage of sales that emanate from this one?
So we don't share specific breakouts, but I can definitely say that 75-80% of our supply chain business does work in the automotive space. So that's clearly on a year-to-year basis, approximately about 1,000 crores of business in the automotive space. And then on the capital goods side,
Yes.
again, I would say maybe 300-400 crores of business that we probably do in the full year.
Okay, just for the record, 410 crores worth of business came in the past quarter from supply chain solution divisions, and of course the freight division contributed 514 crores. The growth respectively on year on year was 13% in supply chains, and of course freight grew by about 8%. What about capacity utilization, Mr. Agarwal? How many trucks did you add in the quarter gone by, and how many as a percentage is the capacity utilization rising? Where does it stand at?
So we added a few trucks. See, we don't own a lot of the trucks that we employ for transportation. We own only about 10-15% of our requirement. So at any given time, we would be moving about 10,000 trucks, but we own only about 1,200 of them. So this in the first quarter, capacity addition has been maybe a few trucks, maybe 40-50 trucks. And the capacity that we will add in this year is about 90 crores, not numbers, but crores worth of trucks in the full financial year. So utilization for us is full, because these trucks are typically meant for specific cargo for specific contracts, and hence they get fully utilized. For additional work, we employ vendors, or we take trucks on spot hire basis.
Fair point. And how is the e-commerce business now working within TCI? This is a segment which is most visible in our homes. The number of times a courier coming in from global supply chains providers such as Amazon or Reliance Retail or even Flipkart has risen dramatically over the last 4 or 5 years. Mr. Agarwal, do you break down the e-commerce business as a percentage of total sales?
No, we don't break it down. See, we work on the back end of e-commerce, which is essentially on the warehousing side, on the fulfillment side, where we run warehouses for some of these guys, where the material comes in, we process those material into different places, we maybe tag them, put some barcode on them, and when the orders come from the customers, we will do the order processing, pick it up, pack it, and then send it out for delivery. And that delivery is not done by us. That delivery could be any last mile service provider. So we typically restrict ourselves on the e-commerce side only to the warehousing bit, not so much on the other side, which is the last mile. So this business has been doing well. We have some new contracts. We have the quick commerce guys are also getting very active. So we are working with many of them jointly, and we see that this will continue to be a strong growth area in the future as well.
Okay, let's focus on your stock price for a bit. Transport Corporation of India, ladies and gentlemen, has been one of the finest multi-bagger stocks over the last 10 years. Each year in the past decade, the stock has compounded at a rate of about 24%, compared with the 17% rise in compounded profit over the past decade. So that's a fantastic performance. In last 1 year, the counter's up 32%. And in the last 5 years, each year the CAGR has been 31%. If we sort of look ahead, Mr. Agarwal, the trailing 12-month numbers on the top line are 4,100 crores, and the net profit now stands at 363 crores. Would you just help our viewers with maybe the outlook that you have for the remainder of FY25?
Yes, so the last year the growth was a bit muted. I think we all realized across the board that the consumer sector was slightly weak. But this year we're expecting a 10 to 15% growth on the top line as well as on the bottom line. So that is, and we think that this growth should continue for the next 3-4 years also, because the economy is on a very strong footing. Our company is on a very strong footing as well. So logistics mirrors the growth of GDP, and hence we do expect with GDP growth growing and increasing rapidly, we should also get that benefit.
Mr. Agarwal, somewhere deep down in your bones, do you feel that over the next 3-4 years, the kind of growth that will come into India because of global supply chains moving in, because of China plus one, because of problems in surrounding economies like Bangladesh, which may impact textile, one of your bigger contributors. Do you feel somewhere that TCI's growth should be multiple times the GDP growth, and of course much higher on a 5-year cumulative basis than what it has been say between 2010-2015 and 2015-2020? Do you see next 5 years being accelerating growth?
So what we look at is quality growth. For us, that is very important. As you just now pointed out, that we've had a 17% CAGR, 24% CAGR on the profits. It is because of the fact that even though revenues might not have increased in that same pace, profitability has increased. We are very careful about that because there are times when there is a euphoria in the market and you tend to get dragged into that. And our market, I would mean industry more specifically. So we are looking at areas where we can add value to our customers, where we can provide multimodal solutions, and hence we become more sticky to them. So over time, that has been the benchmark of our company, and the consistency that we provide for the last several decades of being in the business for 65 years, we've learned that this is the best way to really grow. So 10 to 15% is something that we're looking to really capture, which would still mean a 40-50% growth in turnover in the next 3 to 4 years.
Okay. There is also this increase in debt from 60 crores to about 150 crores. Of course, if you look at the 10-year picture, outstanding debt has come down dramatically. I see a high of about 418 somewhere in March 2020, and then a low of 62 crores in March 23. But we are again back to 150 crores. This is of course very affordable given the size of your equity. But any specific reason why debt has gone up by 140%?
Yeah, so this is not really only debt, which is on specifically debt. It is some accounting entry that is considered as debt, which is leases of buildings, etc. Yes, some debt has increased where we bought trucks, etc. But notwithstanding, we have more than 450 crores of cash also on the books. So if you take the net debt subtracted from that, we are at least definitely on the surplus side in terms of cash.
Okay, fine. And let me just add a very interesting number here. If you look at the shareholding structure of Transport Corporation of India, Mr. Agarwal, you've consistently raised your own individual stake from 2.6% in September 21 to about 3.91% now. Any specific reason that you are intensely bullish on your own company?
No, I think it's we are from a family office perspective. These are things that we keep doing. We always bullish about our own stock. We've never sold a single share. We've never pledged a single share. So we fundamentally believe in the business, and we are focused on it. So that's I guess some addition wherever it is possible.
Okay, I think at the moment the promoters own 69% of the equity of Transport Corporation of India. Mr. Agarwal, would you require funds? We've seen a lot of families coming out with QIPs to boost future growth. Although you have a lot of cash on the balance sheet and it's a investment light model that you follow, but in terms of capacity expansion, what are the plans in the coming 18 months? New warehouses, new how should I say, supply chains that you're looking to set up?
Yes. So I could share the next, basically for the fiscal year 25, our plan is to do a capex of about 375 crores, out of which about 125 crores will go in new warehousing and land and building, about 100 crores in trucks, and about 75 crores in the new ship order that we've placed. That's the advance of the ship order. And then the remaining in other warehousing assets or containers and the like. So this is a typical plan, and we think that we should be able to achieve that of 350 to 375 crores. And for the next fiscal year, we think the capex will be about another 250, 300 crores also.
Fair point. So a minimum of 250 is what we take, and 375 for this year. My final question to you, Mr. Agarwal, the budget that was recently passed lays a lot of emphasis on logistics costs coming down as a percentage of the total raw material costs that companies bear in India. Anything that catches your fancy which might help you as a company to not only improve your services but also help your customers reduce their transport costs?
So the national logistics policy that the government had released a few years ago is very clear that logistics cost in the country needs to come down. And one of the ways that it can come down is if we shift from road to other modes of transport, that is rail and sea, coastal shipping for that matter. And coastal shipping is something that is really starting to pick up now as well. And once this shift starts happening, we will see the cost of logistics coming down, because it's definitely cheaper to move by those other modes. For that, you need a lot of infrastructure. So the budget has emphasized a very high degree of expenditure, about 3.4% of GDP on infrastructure, which is definitely going to help the cause of multimodal. The other aspects of the national logistics policy is digitization. So how we can move everything to a central platform, which is happening, something called the ULIP, Unified Logistics Interface Platform. We will see more and more transactions happening digitally, and that will ease and speeden up the pace of business. So that, and the government in the budget has also talked about digital public infrastructure for logistics as well. So all of these factors are things that are coming in from the national logistics policy and available also, highlighted in the budget also, which is very good for the sector as a whole. And anything that is good for the sector is also good for us as an organization.
Right. With that, Mr. Agarwal, we'll call it a day as far as quarterly performance is concerned, and all the best for you, to you and your team for the remaining 9 months. May the trucks continue rolling, and may the GDP that you carry on your tires increase dramatically in the coming quarters as well. Thank you so much for your time, sir.
Thank you so much.
That, ladies and gentlemen, was Mr. Vineet Agarwal, the Managing Director of Transport Corporation of India Limited, India's largest road transporter. Thank you for watching us. I hope you enjoyed this conversation as much as me and our PCR team did. Please continue watching Business Today Television for all your news needs on the financial markets. Thank you.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is the most